Welcome to BRTV podcast. In this episode, we'll discuss why are the markets crashing? Is coronavirus the reason? Is that the trigger behind it, or is there something else? So we'll look at three charts closely to understand why it has crashed drastically. Now, as you might be aware, every 5 to 8 years there is a significant correction or even a crash that translates into recession most of the times. It happens, if you look at the charts historically, you'll find out that this has been the trend. uh, Sometimes the correction is just mild, or sometimes it takes a full blown market crash. It takes the phase of the full blown market crash. Now let us look at these charts closely. So I'm going to put in at least 10 years of data, 10 years of chart, and we'll see the trend. Right now, the markets are trading at, if you are in India, I'm going to give you the example of Nifty 50. So we'll first look at Nifty 50. Uh, Here it is, as you can see in this chart. Right, let's hover over the technical indicators, so it'll give us clearly the patterns. Now, what happens is, in the market there are two primary factors involved. One is fundamental, the other one is technical. Most of the time technicals outweigh fundamentals. What I mean by saying that is, even if the fundamentals of the companies are strong, if technicals are weak, it might outweigh those fundamentals and might result in significant crash. This has happened in cases of many large caps historically. If you look at the example of many names such as Indiabulls Housing Finance, Yes Bank, DHFL, or PC Jewelers, ZEE Entertainment. If you look at the charts of all these stocks, you'll find out there was a bubble sort of pattern. Now, next in the list are IndusInd Bank and RBL Bank. So the charts again represent a form of bubble if we look at that way. I'll also share with you what a bubble chart looks like, so you'll be able to find out what I mean. Same was the case with Bitcoin earlier, and it was also a bubble which crashed last year. We'll have a look at that as well clearly. So first, let's come back to Nifty 50 chart and look at the trend. Now here you can see in the year 2007 the market was at its peak roughly. So we're just looking at rough data points. If you want to go into detail, you can hover over those particular sections and you'll find out exactly what the numbers were at that time. So it was at its peak roughly in the year 2007, towards the end of 2007, 2008, end of 2007 and the beginning of 2008. Then the Lehman crash happened. Then the market crashed and it came down to all the way to, Nifty came down all the way to 2600. As a thumb rule of market, or as a behavior of market, you can say anything that goes up comes down, anything that goes down also recovers. So you can see the market started recovering after that, right? Yeah. Now, so next point that I want to highlight is, if you see at the trajectory of the chart, you'll see that it has been rising consistently and has gone up significantly. What results in a market crash is unjustified valuation of the markets. Now, how do you find out the valuations? You can look at the PE levels. Now, if you look at the PE level of the market at its top, you'll find out it was trading at a significant high value, which was not justified. And again, as we discussed, every 8 to 10 years there is a market crash. Perhaps in this case it's been 12 years now since 2008, although we did witness a significant correction in 2013. You might not want to call that a crash. because it was just a correction, perhaps. But this time it looks like it is a market crash. Now, if you look at the chart, it has completely nosedive. There's a brutal fall. Now, if you are a retail investor, you need to avoid investing at these times to save your money unless you have expertise, you know how the technical indicators work, what are various charts. So if you know that art, you're fine. You need to apply strict stop losses before trading or investing, and if that gets triggered, get out of the market. Do not invest irrationally in these times, because you might lose a lot of your hard-earned money that way if you do that. Yes. So now it's quite clear the market has corrected. In fact, it has crashed, and we don't know where the bottom is. The bottom may be somewhere around 8,000 or 7,000, or in worst case scenario, it might go all the way to 4,000 levels or 3,000 levels. Uh, it depends on the nature of the crash. Coronavirus has given the markets a kind of trigger to replicate that behavior. All those investors who've made money, traders who are waiting for the opportunity, have started leveraging this opportunity, this fear among amongst the investors and trader community. For sure, coronavirus is going to impact a lot of industries, a lot of economies. There's no doubt about it. Now, in a different podcast, we'll discuss about how coronavirus would impact the industries and the economies. We'll have that conversation as well. But first, let's discuss about the market crash. So we're looking at Nifty, and it has crashed. We don't know where this crash might at what point it might go till. So as of now, it's trading at 8,200 levels, which is today, the 19th of March. Uh, as I said, you have to exercise significant caution while investing in these times. Don't get irrational. You would find better opportunities, and even if you decide to invest, you always have to do it in a staggered approach. Always keep some capital with you so that you can wait for the opportunities and then invest to reap significant rewards that way. Right, so that's how the market behaves, and those who invest in a disciplined manner, those who invest strategically in a staggered manner, as we discussed, always make some money. Unlike others who invest irrationally and lose their money. This is particularly for retail investors, because if you are a retail investor, you don't know how these inside information works. So it is always advisable that you exercise caution. Do not follow the herd. Do not follow the crowd. Yeah. So what has contributed to the Nifty fall significantly? As we discussed, there's a bubble chart pattern. We'll have a look at the next screen. This is the bubble chart. This is how it looks like. Now it is up to you. You can pull up the data, pull up the chart of any stock, be it Reliance, HDFC, IndusInd, Yes Bank, DHFL, ZEE Entertainment, ITC, or any other charts. Now they may or may not be identical to that of a bubble chart. Those who are identical to that of a bubble chart, you need to understand that it is kind of bubble, and if it has gone up significantly, then there would come a time when it would go down as well. Now when it goes down, it always respects the support levels. So you must be aware of what those support levels are. uh, like I said, if you have technical knowledge, you would know what those support levels are, and then you can find out more about the patterns of the charts and its next move accordingly. So that's about it. What are the how you can stay cautious, how you can be careful in this market, refer to these points. If you have any questions, you want to know anything in particular, drop your questions in the comments below and we'll try and get them answered. Thank you very much for your time, for joining us. This was Harsh Tiwari, host of BRTV podcast. It's always our endeavor to add value to your lives. So if you haven't subscribed to our channel, please do visit our website where we share meaningful and compelling stories of entrepreneurs. You might learn from it. And stay tuned. A lot more meaningful content is coming your way. Thank you very much.